Welcome back to the Money Script Podcast. It's your host, Yohance Harrison. So happy to be with each and every one of you today. I want to give a big shout out to all of our brand new subscribers. There are so many of you. You're coming from everywhere. And it's just very exciting to know that all of you are out there telling a friend to tell a friend to tell a friend so they can build their financial literacy. It is still in the middle of summer, the hottest days we've ever seen. So for all of my listeners out there across the United States, I hope that you are getting United States and Europe is what I hear as well. I hope that you're someplace cool. I hope that the AC is blowing, the fans are on. Please be safe out there. Please check on your loved ones. Check on especially the elderly. I saw a friend of mine posted a video the other day. She was walking and she saw a dog in a car. Please don't leave your dogs in a car in these hot days. Please let's just take care of each other. So if this is your first time listening to the show, I am a financial advisor, behavioral financial advisor by trade. My role is to help people bring alignment between their financial behaviors, their values and their goals, basically just help them to make better financial decisions. The purpose of this show is just to feed you with some financial literacy. We're going to talk about some current events happening in finance. And as always, I have a guest. I won't say always. There's a few times I don't have a guest. I have a guest. So for those of you that are watching on YouTube, you already see him right there. We have Mr. Johnathan L. Manning. He is the founder and chief investment officer of 88 Technologies. We're going to bring him into the show here shortly. But first, let's talk a little bit about current events. Now, over the past couple of episodes, we spent a lot of time on the changes in student loans. So by the time you're listening to this, student loan payments are about to be due. So hopefully you are preparing for that. In relation to the student loans, I had a client just today asking me about refinancing student loans. And unfortunately, I had to tell them that there's not a lot of options right now because interest rates keep going up. So the current event right now, depending on when you're listening to this, but as of the end of July, the Federal Reserve decided to raise interest rates once again. Okay, so the target rate continues to go up. That means our short-term interest rates are still higher than our long-term interest rates. For those of you keeping score, that is what we call an inverted yield curve. But what does it mean for us as consumers? It means we can get paid a considerable amount of money in some short-term or very safe-like instruments. So what am I talking about? I'm talking about money market accounts. I'm talking about savings accounts that offer interest. I'm talking about high-yield savings accounts. For those of you that are familiar with the Capital Ones, the Marcuses of the world, and not Marcus as an individual. What up, Marcus? Shout out to you. But Marcus as in Marcus account is an account by Goldman Sachs. Also American Express, and they keep advertising every time I log in, open a high yield. However, I have a different way of doing things. I don't have my money in a high yield savings account. Instead, I've been putting in my money into treasury bills and treasury notes with short-term maturities. So I'm able to, in my opinion, skip the middleman like Marcus. Not you, Marcus, you're cool, but skip the middleman and get a higher rate of return on some of those, on those notes and those bills. Now, again, I don't encourage you to do this on your own. You want to work with a professional to find out if it makes sense for your situation. But if you're accessing those treasury bills and notes, you can get rates higher than 5% as of this recording. It is July the 28th. Okay. Don't hold me to that number whenever you're listening to this, but I'm just telling you, if you're listening to it around the July 28th timeframe, go look and see what some of those rates are, because especially for those of you listeners, and I know some of you do, I can't see your bank account, but I have a pretty good idea that you're sitting on maybe $5,000, maybe $10,000, maybe $15,000 because you listen to the show and I say, hey, build that cash reserve, and you built it. But if it's just sitting around earning nothing, the truth is you're losing purchasing power. And I don't think that's a good idea. We want to be able to grow that purchasing power, and you want to be able to also protect the money. But like I said, earn a little bit. You worked hard for it. Your money gets to work hard for you as well. So I'm sure we'll talk about that a little bit more later in the show, but I want to get to our distinguished guest, Mr. Manning. Like I said, founder, chief investment officer of 88 Technologies. If you're an avid listener of the show, you know what we're about to do. Yes, I just introduced someone else that is in finance. We're about to have a Between Two Advisors conversation. So here it goes. So with that, Johnathan, welcome to the show. How are you?
I'm doing well, man. Thanks so much for having me.
Oh, you're very welcome. You're very welcome. You're very welcome. We hope not only that you have some fun, that you're able to come back. So let's just start with 88 Technologies. What is it? What do you do?
Gotcha. So 88 Technologies is an investment manager for a hedge fund. Most people don't know that a hedge fund is actually three different companies. I'll kind of go through them really quickly. So you have the limited partnership. That's where all the capital from investors are reserved. That's in Delaware as a limited partnership. And then, of course, somebody has to manage the money for those investors, right? And so that's what 80 Technologies is. It is an investment manager that specializes in futures and commodities, right? And so I'm registered with the CFTC and the SEC and the NFA. And then, of course, the third company in a hedge fund is the general partner, right? They're responsible for assigning an investment manager, making sure that all the compliance is up to date, assigning, an auditor, administrator, etc. So, but yeah, it's a entity that is does the risk management, the allocations, the trading for a hedge fund.
So let's not assume that all of our listeners are familiar. Let's break it down a little bit further. Okay. What is a hedge fund?
So to put it very simply, a hedge fund is, let's say, for example, let's use the AUC, right? Let's say Spelman and Morehouse and Clark all pool their money together. And then let's say they had, let's give them a shout out, Morris Brown managed the money, right? That's basically what a hedge fund is, right? It's a pool collection of assets managed by a professional.
Got it. So it's an investment tool, investment portfolio. So who has access to hedge funds? I mean, are they for everyone?
So it's funny that you mentioned that. So that's my goal. I do want more people to have access to hedge funds because, but primarily hedge funds are only for the wealthy, right? And so kind of my personal belief is that shouldn't be the case, right? So the government will argue that, well, they're trying to safeguard the common normal person, and they may not be eligible to take the risk, or maybe have the assets to take on the risk of a hedge fund. But for me, is that hedge funds can generate a lot of capital and a lot of income for people, right? And so right now, hedge funds are usually for like the wealthy, right? So right now, there are different standards of investors, but for our type of hedge fund that trades futures, the only kind of investors that can be qualified are QEPs, qualified eligible persons. And to be a QEP, it's a very high standard, right? In order to be a QEP, you have to have $2.1 million in assets, which unfortunately eliminates...
liquid assets?
Yes.
Oh, okay. That's a tall bar. All right.
Yes. And, I have a really big problem with that because that eliminates the vast majority of the country, right?
But anyone can go give... you could have given, what's his name, Sam Bankman-Fried, a bunch of money at FTC. Anybody could do that, but don't give your money to Johnathan Manning because you need to have $2.1 million.
Right. And it's one of those things where, you can bet on sports. You can go to your local, gas station and play the lottery, which is gambling. You can go to Vegas and gamble. But when it comes to trying to better yourself, better your family, the government has a bunch of rules around who can and cannot invest in certain asset classes. And personally, I don't believe that just because someone is wealthy doesn't mean that they're somehow smarter than somebody who's not. I believe that just because we have wealth does not equate to intelligence.
So to clip that, that's going to be what we're going to run with that on Instagram over and over and over again, or TikTok, wherever this stuff ends up. So why, Johnathan, did you decide to go into finance and to eventually build a hedge fund? Tell me how this was birthed.
Sure. So it's a very unusual path. So I guess a little bit about myself. So growing up, my family, we didn't talk about stocks or commodities growing up. Both my parents were government employees. So my mother is an educator, retired from the school system here in Savannah. And my dad was retired from the Postal Service. And so, of course, with government entities, you get a pension, you do 30 years, you get a gold watch, and that's that, right? And so, for good reason, my parents didn't have a reason to know about stocks because, once you did your 30 years, your retirement was guaranteed. So for me, I used to work at a aerospace company here in Savannah. And so that was gonna be my goal, right? I was going to work, do the whole 401k thing, invest over 30 years, retire. And but while I was there, so the company that I used to work for is owned by a company that's publicly traded, General Dynamics. And so General Dynamics is a behemoth defense contractor. And so because we were a subsidiary, we got to be able to, we basically got stock options in the parent company. And so some of my coworkers were trading their 401k, and they told me that they were making 20% returns in their 401k. And instantly a light bulb went off in my head. I was like, if I could trade my own 401k and get even close to what they were, reportedly telling me that they were earning in their
reportedly. Let me pause you there. Listeners, viewers, people do a really good job of telling us all the times they win. When they go to Vegas, or they win the lotto, whatever. Oh, you hear about all the times they win. We as humans are a lot less vocal about the times we lose. So hence the saying, take it with a grain of salt.
Yes.
Continue.
Yeah. So reportedly, they were making 20% returns. And I was like, wow, like if I could do that, I could spend more time with my family. I could retire faster. I get back to my community. I got to have more freedom. And so, and around the same time, I was kind of getting the sense of, while I did love my job, at the time, like that was like my dream job. Like I love aircraft. I love what I was doing at the moment. But to be able to break free from that, job and have more freedom, and that was just like the perfect solution for me. And so from there, I fell in love with the financial markets. So I began to read every book I could find, watch every video I could find on the internet. And like everybody, I was day trading, right? Pick whatever platform you like, but I was day trading, which is extremely risky, and has a very high unsuccessful rate. Most traders, I'm talking about like 90% and higher, are losing money and would never be profitable, right? And so probably one of the hardest professions to even get into. And so I was day trading, but of course I was at work. And so it was kind of like, I was trying to trade, but I was at work, and it was just kind of, there's a kind of conflict there, right? Because of course you get to be working at 8 o'clock and the market's open at 9:30, and so I find myself missing opportunities all the time. And a little bit later, like, I felt like God was leading me to like quit my job to teach people about the financial markets. And for me, I was really happy. I was, set, love my job, love my company, was, having a great time. And the whole part about, quitting my job on faith to teach people about the financial markets, it was kind of shocking to me, but, I did it anyway. And so I spent a year trading for myself. And the crazy thing is that it didn't work out, right? So
you were in the 90%.
Yes.
Okay.
Yes. So
what are the odds?
I know, right?
90%.
Exactly. And it was crazy because, I told my coworkers, I was like, yeah, I'm going to be a millionaire, and I'm going to come back and help you with like your businesses and help you retire and all the other stuff. And, it didn't work out. And so I was right back at the job like a year later, and I was frustrated, and I didn't want anything to do with the financial markets. Right. And so I used to trade downstairs in my office, and, I didn't even want to go back in that room in the office with the computer and the monitor. I was like, I'm done. Right. But my wife continued to encourage me. She was like, well, that's what God told you to do. Keep going. And so the good thing is that I kept a trading journal. So let me back up. So one thing I'll tell you about trading, right? So if you're trying to get into trading, don't do what I did, right? What so many people do is like they trade with real money. But the issue is you're not going to be good at trading when you first start. So I was basically a scratch trader. So basically I won as much as I lost, right? So, but you're trading with real money, most likely because you're not good at it, you're going to lose money, right? And by the time you actually, so number one, if you get good at trading, right? Because most traders never figure it out. But let's say you're in that 10% that actually do figure it out. By the time you do figure it out, you've already lost all your money. So it's kind of hard to make money if you don't have any money. And so, most people would be better served putting your money in the index fund. I tell people all the time, if you're going to trade, or if you're trying to make money in financial markets, most people are going to be better served putting their money in a index fund, S&P 500, NASDAQ 100, or 2000, one of those indices, because most people are not going to put in the work. I'm talking about the literal work of studying, analyzing to be successful in this field. Most people don't realize that the financial markets attract not only the smartest people in the world, but literally the fastest computers, algorithms in the world as well. And so,
and the dumb people in the world, it attracts them too.
Very true, very true. And it is the most competitive business and sport you can think of. And so most people are not going to put in the effort to compete against them. And so, like I said before, most people are better served putting their money in a index fund. And so for me, but if you are interested, if you're in the 10% and you want to try, a lot of brokers have something called paper money, right? Or like a fake trading account, right? So you can trade with not real money. Practice your craft, get your trading style and hone it. And then once you prove yourself in a simulated environment, then go out and trade with real money, right? I did not do that. I made a mistake of trading with real money. But going back to the story, so my wife continued to encourage me to go back to what God told me to do, doing this. And so the good thing is I had a trading journal. And so every day I would wake up, I would write down, how I felt, what I ate, my mood, my energy level, for every ticker that I traded, the company, the ticker name, the trade time, my thesis or what I was thinking about, why I took that trade, the P&L from that trade. And then I went back from that year of data and began to pull out basic correlations of, when I did this, that happened. When I did that, this happened, right? And so basically when I did something like this, let's say when I did A, I had a negative P&L. When I did B, I had a positive P&L. And so I began to extrapolate, okay, maybe I should just keep doing everything that results in a positive P&L. I wrote all those things down.
Okay.
And then I realized that, if I'm competing against some of the smartest people in the world and the fastest computers in the world, I need to compete on the same level. And so I wrote my own algorithm to be able to, crunch data as fast as they can, right? So just for example, every quarter, companies release earnings data. And it talks about the revenue, their expenses. It may give some kind of guidance or forecast on the future for the year. And so those reports come out. I mean, they're probably, sometimes, 10 pages, maybe hundreds of pages sometimes. And then, of course, every year there's an annual report that comes out that are hundreds of pages. And so it would probably take me, a lot of time to go through.
Too long. But by the time you get through it all, you've missed your opportunity.
Exactly, right? So if you're reading through it, a computer can scan through everything, pick out certain words that determine sentiment, and then figure out if this is good or bad. And then from there, buy or go short. And so I said, okay, I need to find something that can do that as well. And so I wrote an algorithm called Project Exodus, and that was my way of competing against the quote unquote big boys of the financial world. And from there, back tested it. It worked out beautifully. Forward tested it, worked out really well. Forward tested it with actual real money. Then it worked out, considerably well as well. Of course, along the way, I kept making tweaks. But once they got to a certain, threshold of success, I kept going with it. And so now I said, okay, now that I have something, how do I help people, right? When I was trading, I was putting out, videos on YouTube and trying to teach people about the financial markets. And so along the way, I was getting, messages about, hey, I would like for you to manage my money for me. Can I send you money? And I was like, whoa. There's so many rules around who can manage money for other people. I was like, let me just teach you. But of course, most people don't have the time to actually learn how to do it. And so that was kind of my first kind of market research on, okay, people really do want this done for them. And so that led me to eventually get my license and be able to open my hedge fund.
Got it. Got it. That is an incredible journey. I love that you did experience the loss with your own money.
Yes.
I also, as an advisor, have found that very important, that I have had some of the same experiences that my clients have had, which is why I choose to invest alongside my clients. Like, there's the most aggressive portfolio that I manage, I'm in it.
Right.
And so when COVID hit and we went up by 100% in a matter of months, I was right there with them. And then when it fell by 70, 80% in a matter of months on the backside, I was right there with them. Right. What's interesting is I had multiple clients that, for various reasons, because I'm more of a buy and hold sort of investor, where we had sold things while they were up, just for the reason, hey, we made some money, let's sell it.
Right.
I never sold anything in my own portfolio. So I rode all the way up the roller coaster and came all the way. I'm basically the same. Well, this year's been good, so I'm a little bit better off. But by the end of 2022, I had the same amount of money as I started with in 2019. And at one point had almost, doubled it twice at one point. It was almost 200% some of those positions.
Right.
And then just to ride them right back down. I was like, and so when my client's like, oh man, I used to have, like, yeah, me too. So that I feel that is good. And I think that clients appreciate that from us, knowing that we're not asking them to do anything with their money that we haven't done or not willing to do if it were appropriate. Because, not everything is appropriate for everyone, right? But not doing anything that we wouldn't be willing to do ourselves. You mentioned in your story that growing up in your household, that money wasn't talked about a lot, stocks, and how your father, pension and gold watch. By the way, did he get the gold watch?
Yes, he did.
Okay, good. Just checking. But you spoke to that, and your mother, you mentioned, was a school teacher. So I'm curious, and for those of you that are friends of the pod, you know what time of the podcast it is. I'm curious to know, Johnathan, what is your first memory of money in your household?
Gotcha. My first memory with money was really just it was like a collection of memories of, like, we didn't grow up poor by any means. Like, there was no utilities missing, anything like that. But we definitely were not, well off. I would probably categorize it as like lower middle class. So just above getting free lunch at school. But in the summertime, I remember my mom telling me just distinctively, go outside. I'm not cooking, because at the time, Savannah served free lunch on the park every summer. And so it was like, all the kids go outside, eat free lunch. And then this was not some gourmet lunch. It was like,
oh no, there's bologna and 2 pieces of bread.
Yeah.
And a slip-up box. Oh yeah. And an applesauce packet. I know what you're talking about.
Yeah. Mm-hmm. Yeah. And, and so for me, money was just like, okay, we never, like I said, wasn't poor, but definitely was not well off. And I just have like these, I think the first time I realized that, okay, my family's a little bit different was, so I went, in, I believe, like 5th grade. So I'm a huge, like, sneaker fan. So, the Jordan 12 taxis, there's these white and black, Jordan, iconic. And, of course, you ask your parents, hey, can I get these shoes? And of course they're like, well, no, it's too expensive. I'm like, okay. And so, but this is kind of dating me a little bit, but Payless, it's like this, I believe Payless is closed now, but
Payless is bankrupt because they didn't get people to pay more, but go ahead.
Yeah. So Payless was like this shoe store that basically was like a knockoff of whatever,
whatever was hot. Yep.
Exactly.
They had to knock off. Yep.
So they had the quote unquote knockoff taxis. And so my mom was like, well, just get these. And so, I mean, they looked very close. And so,
one of your friends got really close. Like,
yeah. So as
why your Jordan don't have no fingers on it?
Yeah, man. So as a 5th grader, I was like, okay, whatever parents say, I'm all right. We'll rock with it, right? Even though I wanted shoes in finish line, we had to go to Payless, right? So we get to I get to school and I'm feeling good. I got my new, Jordans on, and and I remember walking into class, and man, the way these kids lit into me, I'm talking about like to this day. I remember walking in and they were like, Johnathan's shoes not fake. They fake. And it was, oh man, it was a bad day. It was a bad day. And so, of course, I never wore them shoes again. And I was like, okay. So that was kind of like my realizing, like, okay, there's something different, because other kids had Air Max and, Tommy Hilfiger was popular at the time, and, Polo and all the stuff. And, I was just like, you're just wearing normal, whatever clothes. But yeah, so that's kind of my first real memory of, okay, me and the other kids are a little different when it comes to money.
It's a little different around here. I appreciate that you are the first one to share on the podcast an experience like that. We get duplicates every now and then. Wow. I've shared my Jordan story a few times on the podcast. But the Payless, you're gonna wear the knockoffs, and you had to deal with the what are those? Man, that's yeah. I also know that pain. It wasn't for Jordans, but I remember situation. We didn't go to. My mom would go to. It was nice enough she didn't take me to Payless, but she would take me to Famous Footwear.
Yeah.
And Famous Footwear would also have something that kind of looked like the other, but wasn't quite it.
Right.
Or would have what came out 2 years ago.
Got you. Yeah.
So no, I remember that vividly, and I know what it's like. We were to a lower middle class. That's actually how I describe it. And we were actually rising to probably middle class until my mother fell ill, and then we were forced right back into poverty. So. I remember free lunch too. I do. Man, that's a beautiful story. Well, I am so thrilled to hear that with those experiences that you have decided to join the many ranks of us individuals out there trying to help people improve their financial literacy, grow their money, and make better financial decisions. Now, you mentioned earlier that your fund is only available to, you said QEPs. Was that it? Did I say it right? Mm-hmm. If someone is a QEP and they wanted to learn more about your fund, where should they go?
So they should go to our website, 88technologies.com. And from there, they can email me directly or our team. And of course, from there, we give them, everything, right? So I believe in, 3 basic principles: integrity, transparency, and results. And so our pitch deck about the fund gives the information about the team, the strategy, the return for the past 2 years. It gives them, literally, they can see every redemption, which is withdrawals, every subscription, every deposit into our fund. They see the performance. And so, that's where it can go if they want more information about the hedge fund.
Beautiful. And that also tells you like who the custodian is, where the funds are housed, all that good stuff as well.
Our auditor, administrator, all that good stuff. That's correct.
Got it. All right. So listener, if you are a QEP and you're interested in a hedge fund, we'll put the website in the show notes. Feel free to go in and do your research, do your due diligence. Also look at other options that are out there if hedge funds are something that you feel can help enhance your investment portfolio. And of course, you meet the minimum investment requirements. Today's show, I'm so grateful today, Johnathan, that you could spend time with us and we could have this conversation between 2 advisors as 2 individuals, like I said, that are out there trying to improve. Just want to quickly recap on a few things, to help everyone trying to improve their finances. I want to recap just on some things we spoke about earlier in the show. Check on your check. Well, actually, let's go back. Check on your loved ones. Okay. Hottest days we've ever had. Check on your loved ones, especially the elderly. Make sure their air is working. Make sure they got cold water. Check on your pets. Please. If your pet stays outside, that's great, but make sure they have some place they can go in the shade and they have some cool water. Throw some ice in their water, something like that. Spoken as a dog lover. Also, check on your money. Okay. If you have hundreds or thousands of dollars that are just sitting in a passbook savings account or, or one of those other checking accounts, what have you, and you're not earning any interest, take inventory. See if there's another bank that's willing to pay you to hold on to your money. And while we're talking about payments, if you're getting fees on your bank account just for having a bank account, you need to find another banking relationship. Okay. Definitely. These banks have been making fees on our backs for years. You have other options. Look into those options, please. Don't just give your money to these banks. They should be giving you money right now, because trust and believe they are making money on your money. You deserve to make some too. And then for those of you that want to learn more about hedge funds, please check out 88 Technologies and see what they have to offer. Look at some other options that are out there as well. If you want some help from a financial advisor, I'm here. Okay. The link is always in the show notes. You can go to the website. You can reach out to me, schedule a complimentary consultation. I'm happy to visit with you to see if I can help you make better financial decisions. So just want to really quickly. Oh, by the way, in case y'all didn't notice, for those of you on YouTube, podcasters, you gotta have to go to YouTube to see this. I am in a new location. Well, I'm in the same location. I'm in my house, but I decided to, for those of you that are clients and have been in Zoom meetings with me, I decided to move to my desk for the podcast, and it's flipping awesome. I absolutely love it. So I've got the whole background and the ambiance. Y'all see, wrong shoulder. Y'all see the bull. That's the little bull back there hanging out. There's a bear. He's somewhere over there. There's the man sitting on the toilet. The little thinking man. He's down there too. Because that's usually where some of the best research is done for financial planning. I don't know if you knew that, but that's where all the research is done. Johnathan, you know what I'm talking about, right? I'm going to go study on the porcelain stool. For those of you that are familiar with it, we talked about this one of our other episodes, the values and happiness. That's there. Shout out to Carl. Thank you so much for that. So yeah, this is the new space. I love it. This is something we want to do for a long time. So I'm very excited to now be in this new space. And thank you for all the YouTubers out there that join us and have been sharing it and telling a friend to tell a friend to tell a friend. Since I am at my desk, I do get to look at the calendar. So that's the other thing. I was at the other spot. I didn't have my calendar available. So I could look at the calendar and see who I got coming up for podcasts. So it looks like we have, we have another Between Two Advisors. We have Pamela Sams from Jackson Sam's Wealth Strategies. So we got her coming up. Pamela, looking forward to checking you out. We have KJ Rose from the Rose Effect. This woman's got like Emmys and gold records. And so I think she has an Emmy. Don't quote. If she doesn't have it, I'm speaking into existence. But she's got gold and platinum records from all the folks that she's helped along the way. We have, I love having the calendar. We have two doctors coming up back to back. Okay, excuse me. And these are two gentlemen that are making huge impacts in their local markets, and they're emergency doctors. So for those of you that are residents and medical students, which I know a lot of you are, because I get your emails, I get your tweets and all that other fun stuff. I do have two doctors that have been through the trenches and are making a huge impact in their local market. So look forward to those coming up on some of the future episodes. Oh, and I have one more. I'm so excited about this one. So excited. I have someone from, I'll essentially say my childhood. He was one of the first individuals, along with another, that gave me and my friends an opportunity to be live on the radio in Charlotte, North Carolina. So for all of my Charlotteans out there, you know the name when I say it. I have Fly Ty coming on to the podcast, and I'm so excited about it. For those of you that are sports fans, you probably know him as was the voice of the Charlotte Hornets. So yeah, he's coming up. So that's coming up later in August. So we have a huge, just massive impact that we are going to make with some of the conversations that all the conversations that we have over the coming weeks. So again, Johnathan, my friend, thank you so much for joining us on the Money Script podcast. Hopefully you'll become a friend of the pod and we get to check in again with you soon. As he said, 88technologies.com. And we'll leave that in the show notes. And I look forward to hearing from Johnathan saying, hey, somebody found us on the podcast. Like, great. And I'm going to tell that person, hey, find me too, especially if you got $2.1 million. Let's talk. So anyway, everyone, Have a great rest of your day. Go pick up a book and read something about finances to help you make better decisions with your finances as well. Until next time. Thanks for joining us on the Money Script podcast. Be sure to check out our other episodes, subscribe, follow, and give us 5 stars. Continue to send your financial questions on Twitter or Instagram at The Money Script. Go to moneyscriptwealth.com and schedule your complimentary consultation to discuss your specific goals and concerns. Financial advisory and investment management services are offered by MoneyScript Wealth Management PLLC, a registered investment advisory firm registered in the state of Texas and California and other states where exempt. The MoneyScript LLC and the MoneyScript Wealth Management PLLC and guests of the episode may have interest in the investments mentioned today. The opinions and views are expressed here are for informational purposes only. This material is educational in nature and should not be deemed as a solicitation for any specific product or service. All investments involve risk and a significant loss of principal. The MoneyScript nor MoneyScript Wealth Management offer tax or legal advice. Please consult your tax advisor or attorney for specific advice about your situation. Until next time.